Hi, thank you for joining us and welcome to this installment of David W. Klossing's Clarifying Tax Situations.
An Eggshell audit is an audit of a return either by correspondence audit or office audit or field audit where there's been material misstatements within that return that if the government discovered them, they could possibly be viewed as criminal in nature. Errors happen in returns for two reasons. Either somebody got something wrong in the preparation of that return, could have been the preparer. Somebody got something wrong in the accounting underlying the return. That could have been the client or the client staff. Or there's a purposeful misstatement in the return designed to understate tax liability. That's a crime. It's called income tax evasion. And if you have a return where income tax evasion has taken place and that return's under audit, that's an eggshell audit. That's a term of art designed by criminal tax defense attorneys. I'll read you the definition here. An eggshell audit is a civil audit in which the returns under examination contain a material understatement of income. What would I consider material? Well, let's say you have $20 million worth of income on a return. $1 million is material in relation to $20 million, especially if that $1 million can be traced back to one account that didn't get included in the books at all, some sort of a slush account. It really depends on the underlying badges of fraud apparent in the fact pattern. A badge of fraud is something the IRS is going to look at and say, that is indicative of fraud. We've seen it in the past, we see it now. We believe the return is understated due to fraud, not due to negligence. A material overstatement of deductions has occurred. You got somebody deducting their country club membership. You got somebody deducting their rent. Every personal expense that they have for existing on this planet, they deducted as a business expense. That's fraud. Or credits that were claimed that taxpayer was not entitled to. Credit is a dollar for dollar offset on tax. How about a child care credit is claimed where you don't have children? That might be indicative of fraud. The end result of all this is that the taxpayer showed less tax liability than they would have had a true, accurate, and complete return been filed. That's an eggshell audit. Again, these audits could be caused by mere negligence, in which case only a 20% penalty would apply and nobody would go to jail. Or these actions could be viewed as caused by willful intent, and that indicates a criminal situation where the taxpayer or his representative, if a representative actually committed a tax fraud, could do 3 to 5 years in jail and pay a 75% fraud penalty. A 75% fraud penalty, let me give an example. $1,000 of tax liability, they hit you with the fraud penalty, you pay $1,750 rather than $1,000 because they ramp it up by 75% of their fraud penalty. In a negligence situation, they're only going to wrap it up by 20%. $1,000 tax liability, you have to pay $1,200 plus interest back to the original filing date of the return. Here's an alternate definition that I liked on eggshell audits. An eggshell audit is one in which the client and the representative are aware of potential indications of civil fraud or criminal tax violations that have not yet come to the attention of the revenue agent or other examining officer. The part of this definition doesn't make sense to me is, a lot of times the original representative and what makes these audits dangerous may not know that fraud has occurred. Client hands original preparer, let's say a CPA, a set of books. Those books are cooked all to hell. There's deductions claimed that they're not entitled to. There's income left off the return the preparer is not aware of. Preparer takes the client in for an audit, and all of a sudden preparer becomes aware that this just isn't adding up, and the IRS agent becomes aware this isn't adding up. And the scary part is the preparer can actually work against you by trying to defend their honor for their role of preparing your returns, which could put the client in jeopardy. Anyways, if you have an eggshell audit situation, chances are you know it. You know deep down in your heart that you played games in preparing that return. And frankly, you should get as far away from the preparer as you can. Hire somebody that has attorney-client privilege. The only one that does is a tax attorney. And then flat out in the first meeting with the tax attorney say, Mr. Klossing, I'm under audit. What I'm worried about is I left income off my return. I claimed personal expenses that I shouldn't have on my return. I pulled numbers out of thin air and threw them down on my return because I didn't have the money to pay my taxes. Or I claimed a bunch of credits I wasn't entitled to. And I did so knowingly and willfully, and I'm afraid of going to jail for it. At least you and the representative are on the same page, and there'll be no surprises in the audit representation phase. frankly, it should be an attorney that takes you through that situation. Only an attorney can keep that secret in perpetuity because of the attorney-client privilege and represent you in that situation. The idea is to try and keep it civil and not let it go criminal. Anyways, thanks for watching this video.
Thank you so much again for your time and interest in how we may be able to help you. Please don't hesitate to call if something is worrying you. We would be very happy to help. Just call or email for a reduced rate consultation.